Here with Blake Schulze, National Director at Colliers. Mate, the market it's been a crazy time over the past 12 months. Obviously you're across, both the Sydney market as well as the Newcastle. What's your take on what's happening?
Yeah, Mike, it's been really interesting. There's no doubt the Sydney market it's been quite challenging as we had the sort of COVID lockdowns and COVID restrictions, then a bit of a downturn in the market over 2022. But really this year we've started to see things pick up. We're seeing inquiries pick up, appointments pick up, and now we're starting to see those sales velocity pick up as well. So it'll be interesting to see when pricing starts to increase, because it's sort of, on everyone's mind, are we at the bottom of the market, and when are we going to see that upswing in the cycle?
So Newcastle and Sydney, obviously both in New South Wales, are the two markets operating exactly the same, or are there some differences there?
It's really interesting to look at the two different cities, and what we've found is Newcastle and Sydney, they once were in sort of wedlock and then sort of working together. So if you felt sort of market sentiment, whether it be a downturn or a boom in either market, it would translate to the other market. But we've found they're really decoupled.
Right.
And with that, during the sort of downturn that we experienced last year and sort of over that COVID period, we found that Newcastle market sustained that strength. Part of that was we had a lot of migration moving to Newcastle as a true regional city. Now operating on its own, they've got their own transport, education, employment, and now there's residential offering there. So we're getting audiences that are moving either regional into the city or from Sydney up to Newcastle.
And how are the kind of sales performing in those kind of areas relative to, say, 12 months ago?
So if we look at Newcastle to 12 months ago, Newcastle didn't really see a downturn in the market. They just powered all the way through. And it was really interesting to sort of compare our Newcastle's team data in comparison to our Sydney's team data. Whereas Sydney, we did see that slowdown in the off-the-plan market last year. We've really started to see an upturn this year. So just to look at some numbers, first quarter in 2022 versus 2023, we're already up on sales velocity by 70%.
Wow.
So it's a big start to 2023.
Feels like you can't open a newspaper right now without reading about the rental crisis. Is that having an impact on the types of people that you're seeing come through the door?
Yeah, absolutely. I mean, you open the paper every day on the news, all you're hearing about is rental crisis and what's going on. Rental rates are escalating month on month and the vacancy rates are declining. I mean, there's a few issues with that. We don't have enough supply coming on the market to meet that demand.
And it doesn't feel like that's changing anytime soon. I mean, approvals are super low. We're starting to see some early signs, certainly from the consumer, of more searches through the platform, but it feels like we kind of need to get that information out to the development market.
Absolutely. There's more demand that's coming in now, but we just don't have enough supply to service that demand. On top of that, we're finding obviously a new segment in the market where these renters that are now, obviously their rents have been escalating at such rapid rates month on month, they're now looking to buy. So that's further adding pressure on the housing crisis that we face in Sydney.
Yeah, that makes sense. I could see why a first home buyer, if your rent keeps going up and up and up, you'd rather kind of own your own property. Yeah. Are you seeing the same thing with the investors? Obviously, it's a more appealing value proposition for them if the yields keep increasing.
Yeah, it's interesting, particularly if we look at last year to this year, we're seeing different types of investors stepping into the market. So last year, we saw investors that were really chasing that capital growth opportunity, sort of looking when will be the bottom of the cycle and how do I capitalise, on this property purchase and make money on a long-term basis. But now we're starting to get the yield-based investor come back.
Right.
They wanted to chase the high yields that are available because they're seeing the rents are escalating month on month. But it's interesting when you look at that, even whether they're chasing the capital growth or they're chasing the yield, what they're after, they've got an owner-occupier mindset. So they're not necessarily going for the cheapest apartment on the price list, but rather they're going something that may suit them to live in time, but also draw a strong yield in the short term.
So I feel like every time we talk, you're kind of sharing a new kind of partnership you're working on in terms of, whether it's finance or whatever it might be. I think one was the Teslas downstairs with Outbound here in Newlands. You mentioned you've been doing a lot of work with the guys at Coposit. How do you think about collaboration when it comes to, making sure these projects get sold?
There has been a lot of change in regards to what buyers are wanting. We're finding now the smart developers that are actually getting sales and traction in the market now are designing spaces, whether they be internal within the apartment, but also within the communal spaces to function for that live-work type relationship and how that works. Most buyers are still seeking, a car with the dwelling when they're buying an off-the-plan apartment. We have seen a number of developments considering Carshare options.
Right.
So here at the Newlands, obviously we have Teslas down the basement by Outbound. So it's a really innovative way that they're thinking, how do I future-proof these apartments for years to come? I think we just need to look at what the buyers of today need and what do they need to, one, be able to buy a property, but two, how's the livability of that property or that development going to be in the future for them. So particularly just in regards to allowing people the ability to buy. CoPosit's an amazing provider that is allowing, I guess, people to purchase with that may have a minimal deposit but has the ability to service the loan. So that's led to a new market segment being able to participate in the off-the-plan space where they typically haven't been able to do it because they just haven't had the funds available.
It ties into, I suppose, the change with the rental prices and things like that, and it's kind of, as you said before, it's really making the renter be able to step into the buyer.
I mean, that's a perfect market segment. You look at a renter, their rents are escalating month on month. They've clearly got the ability to pay the rent. They've got the ability to service the mortgage or even the down payments on the CoPosit loan, in that construction phase. So that is the perfect product to help that renter translate into a property purchaser.
And I guess, there's so, obviously with development, it's a pretty collaborative process, whether it's kind of the developer, the architect, the financier, the project marketer, the portals, and things like that. And I think, having an approach where keeping an open mind to new stuff, like it sounds like you're doing with Outbound, with the electric vehicles, whether it's CoPosit, and certainly our partnership with Urban, I think you guys are really leading the way when it comes to those types of partnerships in the market.
Yeah, no, absolutely. I mean, you just got to have an open mind. You got to think, how do people want to live now, and what do they need to thrive? And things that people have wanted in the past. Some of it is what they want in the future, but we've also got to evolve and progress, the designs and the inclusions and make sure that, we're setting them up.